Well, Nvidia shares up about 0.5% right now and got another price target bump, this time from TD Cowen. It seems like every day we have a new price target hike for Nvidia to talk about. The analyst at TD Cowen raised his price target on Nvidia to 165 from 140. So, Nvidia's trading just around 130 right now, so about $35 upside. That was 28% upside from Friday's close. In terms of the analyst also, of course, reiterated his buy rating. He thinks that demand for AI systems, Blackwell and Hopper, will remain robust, saying one thing remains the same: fundamental strength at Nvidia. In fact, our checks continue to point to upside in data center as demand for Hopper Blackwell-based AI systems continues to exceed supply, saying overall we see a product roadmap indicating a relentless pace of innovation across all aspects of the AI compute stack. So TD Cowen also thinks Nvidia will beat Wall Street's estimates when it reports Q2 results on August 15th. Expects Nvidia will also raise its outlook thanks to that strong data center demand. So we heard similar sentiment from KeyBank last week when they were saying they expect upside to the results and to guidance, and said despite the fact that Blackwell is going to be released in the second half of 2024, they're not seeing any signs of a demand pause as demand for the H100 remains robust and they continue to see rush orders. So very similar sentiment to what we heard from them. Nvidia shares up about 0.7% right now.
The well-known American investment bank, TD Cowen, has just joined the Wall Street giants who have recently raised their price target on Nvidia stock, as TD Cowen analysts raised their price target from $140 to $165, which isn't really a surprise due to the firm's continuous innovation and robust demand on its products. At the time of this video, Nvidia stock is trading at almost $129. So such a price target raise means an upside of 29% for the stock. This series of raised price targets debunks all the doubts towards the tech giant, moreover, reflects the solid confidence in the firm and its bright future. So, why did TD Cowen make such a decision, and how would this reflect on Nvidia's stock? That's what we will go through in today's video, so don't miss out. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
All right, let's talk some more tech here, and the latest from the sell side. Jenny Horn taking a look at the Nvidia hype. What's going on this morning?
The Nvidia hype, as it just keeps going. And I know you were just talking about the way this is like the only thing that carries the overall market, but right now it's favorable because Nvidia is adding another, just shy of 1% this morning, gained about 2% yesterday. So right now the momentum has swung obviously more in the favor of those that are bullish on like Nvidia and the AI trade. KeyBank today though raising its price target to 180 from 130 with an overweight rating. So that would obviously be well above the new all-time high, which is just around like 140 a share in Nvidia. But they said they're not seeing any sort of pause in demand for their H100 overall figures, despite the fact that we are seeing Blackwell launch in the second half of this year, no demand pause, they're saying, which I think is like the key takeaway. So they overall see demand just continuing to grow. They also do believe that demand for GB200 should support data center revenues of over $200 billion by 2025. And I think the data center revenues are fascinating. More signs that we continue to see of like the money flowing into data centers is strong. We did see that this operator of data centers, which Cyrus One is what it's called, said Monday it's secured about $8 billion worth of credits right now, continue to build its data centers. So that to me is like been the most interesting and the most, I think, exciting part of Nvidia's growth is like their data center growth and their revenue, which has been astounding. And this note from KeyBank though today did also include lowering their price target on AMD, on raising their price target on Marvell. But I have to say that this was objectively still a very bullish note because every single price target, even the reduced ones, were still well above where like AMD is currently trading.
TD Cowen analyst Matthew Ramsey, along with many Wall Street experts, remains positive on Nvidia despite the challenges its stock has faced recently, as he believes that the enormously growing demand for data centers will boost Nvidia's stock to unprecedented levels. As the global data center market size was valued at $342.06 billion in 2022 and is poised to grow from $364.50 billion in 2023 to $605.96 billion by 2031, growing at a CAGR of 6.56% during the forecast period of 2024-2031. This happened just at the right time for Nvidia. Although Nvidia stock is up by 165% on a year-to-year basis, concerns still have managed to surround the firm recently, as the stock is down by more than 2% in the past month solely, because some investors believe that cloud computing providers might slow down their Nvidia chips purchases. And the TD Cowen analyst is aware of this situation very well. However, Ramsey is actually encouraged by the broader sweeping trend of artificial intelligence. He believes that as long as companies seek advanced processors, the demand for Nvidia's accomplished Hopper and anticipated Blackwell will continue beating the supply capacity of the firm. The Wall Street expert believes that even though Blackwell is extremely anticipated and every tech company is racing to get as much of it as possible, the demand for Hopper will not come to an end anytime soon and will keep soaring, which will help the AI giant to beat its second quarter targets. As Nvidia's CEO Jensen Huang said that they see increasing demand for Hopper through this quarter, and that they expect the demand to keep outstripping the supply for quite some time. Therefore, the analyst raised his price target on Nvidia stock to $165 from $140. But it's not all peaches and cream, as Ramsey still believes that there are some challenges for Nvidia in the upcoming quarters. Yet, he trusts the firm's capability in overcoming them. But what are these challenges exactly? Let's find out. Hello everyone, and welcome back to Investocracy.
Yeah, AMD a little lower, Nvidia a little higher. Chips kind of mixed up right now, but a little positive today. And 170, these price targets don't mess around. You know, people are not afraid to slap some pretty lofty stuff in their expectations for Nvidia. So nice timing to maybe instill some confidence when needed today after Nvidia fell short of its previous high yesterday too. So semiconductors broke out, but Nvidia kind of fell short and maybe double topping. So a little positive tone here going to help, I think, to remind people why to stick around. 170 would be nice. How about AT&T? Down a little bit here.
Ramsey stated that cloud computing colossal entities might slow down their purchases of AI hardware as a result of the growing belief that revenues from AI-based products may not be as robust as it was previously expected. One of the biggest supporters of such opinion is the prestigious investment bank Goldman Sachs, whose analysts are known for being loud critics of the ongoing artificial intelligence mania, believing that it's very unreliable, yet too expensive. They have even said that tech giants and beyond are set to spend over $1 trillion on AI capex in coming years, with so far little to show for it. If spending a lot of money on AI doesn't lead to significant productivity improvements, AI might just end up using a lot of energy. Additionally, experts are skeptical that AI will bring substantial benefits in the short term. Yet, Ramsey believes that Nvidia stock should profit from a suite of superior technology, long pedigree of innovation, and extensive growth-oriented investments. Besides, Ramsey expects strong, sustained, above-peer growth across a widening set of AI verticals. And although Ramsey says that there might be a slight slowdown in AI purchases in the year 2027, he sees no clear evidence that indicates that companies might be lessening their processor acquisitions anytime soon. Actually, he considers the opposite scenario to be more likely to happen, which would lead to boosting Nvidia's stock at the end of the day. So, should investors be buying Nvidia stock right now? Let's get right into it. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
There was also a commentary in a Financial Times article from someone that I've never heard of, but they're reporting on James Anderson, who apparently was an early investor in Tesla, Amazon. They had like a whole piece about how Nvidia is going to be worth $50 trillion. So that, we're in that state. That's where we're at for markets. The animal spirits are raging $50 trillion in a decade. So All right, that's usually when things start getting a little bit crazy, but okay. That's the vibe that's out there, the tone that's there.
With the recent price target upgrades from various institutions, solidifying confidence in the stock, and attracting buys as a result, Nvidia stock value could soar. And TD Cowen believes that Nvidia will perform better than previously expected. This is due to factors like strong product demand, innovative technologies, or favorable market conditions. Additionally, the bank is bullish because of Nvidia's clear, straightforward announced plan in dominating this industry in the upcoming years. This is evident in the Blackwell release and also Rubin, which will be released in 2026. On top of that, Nvidia's latest investments in the world's most promising AI firms like Figure AI, the humanoid robot developer, and Databricks, one of the most valued AI startups in the market currently, are more reasons to be bullish. Nvidia's consensus long-term growth rate is 43% a year, which is among the highest for S&P 500 companies and multiples that of Microsoft and Apple. At that rate, Nvidia's operating earnings per share should climb to $80 in 4 years from $19 today, resulting in a long-term price-earnings ratio, let's call it, of 18. With the company maintaining the same level of groundbreaking innovation, many analysts even expect Nvidia's market share to reach a staggering $10 trillion in less than 6 years, as the demand for such products will remain robust. Therefore, Nvidia stock looks like an incredible buy at the moment. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.